Super, guys. So, thank you so much, for joining Saturday afternoon. Uh, my name is Karan. I lead content marketing for Meta in India, Instagram and Facebook, and I've been a two-time founder. And I'm a super active angel investor. I've invested in 50 plus companies till now. I had 11 companies on Shark Tank last year. I essentially invest in consumer internet, consumer brands. Then I also do a lot of B2B SaaS companies as well. And generally I try to invest early, so I come in at like a pre-seed seed level where I can help founders, beyond just the capital, and help them connect with other relevant investors, help them with their GTM, help them in any way I can. A lot of founders reach out to me, especially for growing on social media platforms, growing on Instagram. So that's something that I do. And I also run Accelerate as a passion project. So at Accelerate, we have two wings. We run an early stage accelerator where we help young founders build large brands, and we help mentor them and we help them scale. And then we are also building this community of super angels. There essentially we help people start angel investing. So there are no commercials involved in this community. Like, we don't charge any carry, we don't charge any commissions on our deal, we don't charge any fee. Yeah, the idea is that how can we get more and more people to start angel investing, and understand it more deeply, and also help you connect with some good founders and help you get good connected with good investors. And as a part of this workshop, we're doing this session with Pranav today. Pranav is from the ISB class of 2019. He's a partner at Atrium Angels, which is an ISB focused early stage fund. He's also a recent author. A lot of you might have seen his book Zero to One, trending on Amazon. It features stories of a lot of amazing early stage founders. So first of all, Pranav, thank you so much, for your time. I know it's been pretty crazy for you as well. Really appreciate you doing this. Maybe would love to kind of like, you can introduce yourselves as well. Like, if I miss out on anything, and then we can jump into the session.
Sure. No, I think thank you for having me. I think my first reaction was I am still learning. So I don't know if I have the secret sauce or the playbook to share, but happy to share whatever experience I've had, whatever mistakes I've made, some do's and don'ts, right? Um, in terms of my introduction, I think based out of Delhi, born, brought up in Delhi, did my schooling, college from Delhi, was at SRCC for my undergrad, worked with early stage startups before going to ISB, was at ISB from 2018 to 19. Got into consulting like a lot of people do post ISB, but I knew that I want to come back to the startup ecosystem. So did that, worked at startups overall, right from 0 to 1 to 1 to 10 to 10 to 100, right? And which is why in 2021, I started angel investing, and I started doing it in an individual capacity. I didn't know of communities which existed. I did not know of angel funds which existed. And the idea was just to put my money where my mouth is. So if we say that we believe in startups as part of the larger economy, let's start putting small checks. So this was largely coming out of my own savings. This was not family money or anything. And these were fairly small checks. So that's how that journey started. I remember in Feb 2021, been about 3 years since, done about 12 angel investments in a personal capacity. And from Atrium, I think I've been involved since a year plus now. So started there 1st April. It's been an interesting journey. Happy to talk more about it later. But we've done about 11 investments from Atrium Fund 1. And from Fund 2, we've done about 8-10 commitments as of now. Again, sector agnostic, like Karan mentioned, we do early stage. So yeah, I think that's been the journey. Just happy to be part of the startup ecosystem. And I don't think of myself as a pure investor. Like a lot of my SRCC batchmates have gone into private equity or growth stage venture capital. I've always liked the operator side of it, right? And I think which is why I'm happy to do this session, because as an angel investor, your hat is a very different one from a fund manager's, right? And we can talk more about that. Yeah.
Yeah. No, great, Pranav. Thank you so much, for this intro. Guys, we'll keep the session very interactive. So if there's any questions, like feel free to raise your hands, or maybe you can type down the questions in the comment section. Happy to take them. Again, I mean, this is this is like a very open-ended workshop. Happy to like Pranav and I would be happy to answer any questions that you may have. Pranav, if I may begin, I mean, like you touched upon, you did like 11 investments, I think from Fund One, 8 to 10 investments from Fund Two at Atrium. Generally, and you also mentioned, like that as a fund manager versus as an angel investor, you wear different hats, right? So if you can maybe talk about the size of the investments, like what's the difference, like generally when an angel investor invests versus the fund manager does, and essentially like how does an angel investor how should an angel investor evaluate a company, and how does maybe like a fund evaluate a company?
Sure. So I'll answer those one by one. The first one in terms of check sizes, right? So again, there are micro VC funds who will do 300K kind of checks, 400, 500K checks as well. I think from Atrium, we're doing relatively smaller checks. So we'll do probably 50, 100K, 150K at max kind of checks, right? Typically, these are co-invest with VCs. So as an angel investor versus that, I would say maybe 5 to 10K is the range in which you want to be at. Over the years, it's been democratized. I remember the first time I asked someone for advice in 2020, and I said, I want to start investing. What do you say? And he was like, no, 10 lakhs is the minimum. You'll have to put in a deal. You'll have to do minimum 10 deals. So it has to be minimum 1 crore. So I was like, okay, that's too much. But then later you realize that, okay, 2 to 3 lakhs is a decent starting point as an average check as an individual angel.
Yeah.
So that's how I think of it. The other thing I'll say is, as a angel fund, what you will see in the market, typically there are multiple vehicles. It's 25 lakhs is the minimum check size they'll put. The way to think of it is, it's over a 3 to 5 year period, so it's not too bad. What is important, I think, whether you do it as an individual angel or as a fund, always you're trying to maintain a portfolio, and that I see and I feel that sometimes becomes the biggest gap when people start doing angel investing, right? Even when I started doing it, the first 1 year you'll do 4 investments, but then in the next year it'll boil down to two, then it goes to one, and then you like, my money is not growing, money is not coming back, and it's hard to do it as an individual, which is why maybe a community helps, which is why maybe a fund vehicle helps, right? Because it helps you think as a collective. So you basically get the expertise of other people, you're getting someone else to research things better. So yeah, I think as a fund manager, you have obligation to return capital. So you have to think twice, you'll have to think thrice. But as an individual angel, it's basically you putting your money where you feel it is right, right? So that is how I think fundamentally the nature is very different. I think as a fund manager, you're also optimizing key exits kab honge, how do I solve for my investors for that. As an angel, there's no obligation for that. Lastly, I would say as an angel, people have biases, but with a fund you try to net out those biases. So as an individual, when I started investing, I was doing operator kind of investments, which were a lot more, let's say, I was not thinking, oh, does it have to be a co-invest with a VC or not? I liked a person, he was doing an interesting business, I did it. So I did a alcobev investment, which funds wouldn't really think of, right? I did a cloud kitchen investment, which maybe as many people in the last 2 3 years would have not really gone in for. So that's a factor to keep in mind. And I think as an angel, for anybody starting this exercise, it's important to say that, okay, I will try and mitigate my risks and I will think differently. As an angel, you're sometimes okay doing a pre-product, pre-revenue company. But as a fund, you sometimes want that, okay, operations are established, some revenue traction is there, and then you come in. So there are differences that way. Yeah.
Yeah.
I hope I answered something. I think it's a very important question, but it's hard to just like
No,
answer
no,
fully.
I think makes sense. I think you touched upon a lot of very important topics, right? I think one is that angel investing has been democratized, right? Like for example, at Accelerate as well, right? I mean, if you invest through our AIF and our syndicate, you can invest as small as 50K in a company, 50 rupees, like 50,000 rupees in a company, and you can go as high as you want, right? But like few things that we also say to a lot of investors is that only invest 10 to 15% of your liquid corpus in angel investing, because it is a very risky asset class. You might not see returns for 7 to 8 years, right? And generally, what will happen in an angel investing point of view is, like, if in a general scenario, let's say if you're in a bubble, some investors might get an exit early. But generally what happens is that like, you invest in a few companies for the first 4 to 5 years, all the bad ones or the lemons will go down, right? So that's 80% of your portfolio. Then essentially, like, the maybe like the 10%, they'll do a series A, series B, you'll start seeing 2x, 3x, 5x exits. And then there'll be few which will be like a 10x, 15x, 20x banger, right? So essentially, you have to kind of balance it out, and you have to kind of only invest capital, which is not very liquid, like, which you're okay, taking a bet on a different investment class. I think that's one. Second, I think, as you also alluded upon, it's very cyclical in nature, right? So you have to be consistent, right? So I remember having this conversation with Pranav, and our investment styles are very different, right? So, like, Pranav did 4 in the first year, I think second 2 in the next year, and so on, right? I did 30 in my first year, right? And he was like, "Ki, why are you going so fast?" And to every investor, their own ideology. But essentially for me, I wanted to kind of diversify. I wanted to invest in multiple companies. My check size are very small. I would do like a 1 to 2 lakh rupee check size. My criteria for investing was that I look at a great entry valuation. And I think that Manav is also asked, how do you optimize exits and timing? So I feel that if I can get in at a valuation of, let's say, under a $2 million, $3 million, and I can help the company grow, I can kind of exit early, and then I can keep rotating that capital, in my earlier investments. So I think it's important to be consistent. Whatever number you decide investing, you invest it over a period of time. And why it's important is because, as I said, it's cyclical in nature, right? So, for example, during COVID, Zoom was the hottest stock, and maybe British Airways was tanking, right? Like, but last quarter, British Airways posted their record profit, while maybe Zoom is in losses right now. So it's like, travel has bounced back, but maybe sectors like edtech or online webinars and all, meetings and all, they're not doing that well now. People are coming back to office. So I think it's important to invest over a period of time to kind of see great returns. I think two very, very important points. Pranav, also, I think you mentioned something like, you can be a part of a community versus investing individually, right? So do you
Yeah.
want to maybe talk about that a little bit? Like, how are the dynamics different? Like, if you can maybe touch upon, like, what are the ways an angel can invest in, like, maybe talk about cap table versus an RUV, which a founder floats, versus a syndicate like an accelerate, versus an early stage fund like an Atrium. Maybe you can talk to us about all the four options so that people know what is available for them.
Right. So I think similar to entrepreneurship, angel investing can be a very lonely journey, and it shouldn't be. Like, I think for entrepreneurs also, you want a community to exist. Similarly, for investors also, I think you thrive in a pack, right? So that ways, I think communities are helpful. Now, let's break that down, right? So one is that you are saying that no, I will come directly on a cap table. So there are two things. One is how you invest. Second is the style of investing. So when you're saying style of investing, right, it could be that you want to be a lone ranger. So you're putting money where you feel convinced. I wouldn't recommend that. Second is when you're doing it with a group of friends and you're like, okay, we exchange notes and then we take our individual calls. That's a better way of doing it. But maybe think of a syndicate, right? And think as a syndicate, you are basically part of a group of people who are qualified, have a similar thought process, ideally have a set thesis they work on, and then you know that okay, there are other good minds which are being put to use for that decision making. I think a syndicate process is also interesting. And then there is another approach where you say that, oh, I can't be an active investor because it requires time, it requires commitment, it requires research. So I will be part of a fund vehicle where I'm parking my money. I'm a passive investor. The money is deployed. I know about what is happening, and I'm okay with that. I will engage when I have time. So I could engage once in 6 months. So I think that's the delta between syndicates and funds. If you want to actively be involved in the startup ecosystem, meet founders, attend events, figure out what's happening in the investor network, it's worth being on a syndicate or a community in that sense. Having said that, I think even from a regulatory standpoint, right? I think it's important to note how the regulation is evolving. Since it's a new asset class, it is also a high risk asset class. I think SEBI keeps issuing regulations around this. So I think keeping track of that as a fund vehicle is always important for us. So we keep doing that on an ongoing basis. And to one point which you said earlier, I think I agree. Matlab, using 10 to 15%, I'm thinking 5% to 10% of the overall net worth. Maybe again, I'm a little conservative that way.
Yeah,
Um, at least to start with, right? A lot of times people are like, oh, we are happy to double the number. I'm like,
correct.
no, you start with the minimum
Yeah.
and then you see how it goes.
Start small and then start scaling rather than start very aggressively and then kind of slow down.
Yeah, and again, the one thing which you said, right? People will see their failures before their successes. The losses come first, the gains come later, right? So you
Yeah.
have to be more patient about it. And there was this one interesting line I read from Ravi Handa, right? Who's like this interesting influencer. He'd written somewhere on Twitter that whatever you invest in early stage startups, think of it as an expense, count it as an investment only on exit.
Hmm. Yeah.
So that's the philosophy. I think if you're okay with that, then it's probably comfortable to be part of that asset class. Should I answer this question which Manav had about optimizing exits right now or
Yeah.
later? No.
Yeah. You can go for it.
Okay. So just to answer that question, right? I think how do you optimize timing of exits is tricky. I think at best you can ensure that if you know at a point you want to exit out of that investment, then you try and figure out ways to exit out of it. You can't perfectly time it, if I was to be honest, right? It's like the markets. It is subject to other factors. For exiting, I think entry price is one thing which Karan mentioned. You come in at a sweeter price, maybe you'll get a good exit faster. Maybe in 3 5 years you'll exit out. But I also think one more factor is important is how do you get that exit, right? Who's going to pay for it? Somebody needs to do a secondary investment. That's where either a round is happening, then you opportunistically get out, or an acquisition is happening, then you opportunistically get out. But you can't influence either of those. What you can potentially influence is somebody else buys off yours and other clutch of investors stake, right? That basically means you need to have a ready network of people. It could be investment bankers, it could be family offices, it could be HNI investors who will buy out that stake,
Yeah.
or they will be significantly influential enough to do a follow-on round and you get an exit. So those are your options really, right? Which is why I feel like if you're doing it individually, be actively involved. Else if get into a syndicate community where you have high amount of trust on the person managing it, or just stick to a fund vehicle where you know that there is a high degree of fiduciary responsibility on the other person to solve for it.
Yeah. Yeah. And I think like it also kind of depends upon what's your goal as an investor, right? Like obviously one is that it's an investment class, you want to invest in some great startups, but like for somebody like me, right? Like when I started angel investing, it was apart from this, it was also to build my network and also intellectual simulation, right? So like if I felt that if I can invest in 50 to 60 companies across different sectors, I would know some of the most talented people in the industry. I would build my network, I can learn from them, and maybe let's say if I want to start up in the future, I can kind of have have that opportunity as well. Like it was almost like a MBA where I was paying a small amount to kind of get a front row seat of what is happening in the Indian startup ecosystem. So I think it so when you invest with a fund, you are more passive, right? When you invest on the cap table, like that's when you have to be the most involved,
Yeah.
in sourcing the deals and convincing the founders why they should take your money, why they should take you on the cap table, because it requires an expense, and then driving an exit as well. And a syndicate is the middle ground, right? Where essentially you build your deal flow, you get a lot of opportunities, you decide which ones to kind of invest into, and and then the syndicate helps you drive an exit as well because you're a group of investors, right? And I think Param has also asked, this question around herd mentality, right?
Right.
So I think again it's super important, Param. Like even in a syndicate, like with Accelerate as well, we'll kind of show you 50, 60 companies in a year, right? I mean, so it's important to kind of for you to build your own thesis, right? Like I mean, never go by what Karan is investing in or what Pranav is investing in, because our goals are completely different, our ideologies are completely different, right? So as an investor, it's super important to build your own thesis. And And Pranav, if you're okay, I can flash my screen. I mean, there's this amazing template that Sanjay Mehta from 100x VC had shared about building your own investment thesis. So
Right.
maybe we can share it with the folks, and if a couple of people want to give it a go and see how to kind of build their own investment thesis, we can try that as well.
Sure. I think you can share that, and I've seen that, and I think you posted on LinkedIn also recently. It's an interesting one,
Yeah,
and I think it's a very easy, quick way to start thinking on that direction. So yeah, sure. I think go
yeah.
ahead, share your screen. Yes.
Is this visible?
Yes.
Perfect. So I mean, like, I'll share this template post the call as well, right? But and Sanjay Mehta is one of India's like earliest angel investors, right? And he he treats it like a full-time role. Like he would invest 17, 18 hours a day, in his angel investing. He writes a lot of content. He has the biggest deal flow in the market, right? So I was lucky enough to spend some time with him, and he shared this thesis with me, where he said that this is how you should plan. I want to invest in companies raising dash rounds. So here you kind of mention like what kind of rounds they are raising, that are then talk about the nature of the company, like are they pre-revenue, post-revenue, profitable, targeting sectors or markets. So you talk about the sectors or markets that are interesting for you, and bonus points if they are in a particular space, right? So like for example, for him, right, he mentioned that I want to invest in companies raising seed, early growth, or secondary rounds that are pre-revenue, post-revenue, profitable. That's his thesis again, targeting AI, ML, ad tech, consumer enterprises, like again a lot of spaces, but that's his thesis. Bonus points if they are blockchain based in emerging markets or moonshots, right? अगर मुझे ये अपने उसमें बोलना हो तो मे बी आई वुड से आई वांट टू इन्वेस्ट इन कंपनीज raising a pre-seed or a seed round. I don't go beyond that because I feel that I want to get into an early good valuation. So I would say pre-seed seed rounds that are in consumer internet, B2B, and SaaS and ad tech, because that's I feel that's where my strength is. That's where I can help founders grow. uh, uh, Sorry, that are this is a revenue thing. So that maybe, so here I mentioned that a pre-revenue, post-revenue, and or profitable. I'll use the same thing, targeting consumer internet, ad tech, B2B markets. Bonus points if there are 2 to 3 founders in a team and if the company is profitable, right? Because that's just a great signal for me, which I feel that I've seen at least in my portfolio drive a lot of success for me. So again, that's my thesis. Pranav, you want to give a go ahead?
Sure, I'll give a quick answer on that one, and then I think I'll also take up the question Manav's asking, because I think that question is close to my heart. So on this one, I would say I would invest in companies raising their pre-seed, seed, or a pre-series A round. I think when you have greater corpus, we are fine with a slightly larger check then, and rounds that are preferably co-invest with a VC.
Interesting.
Preferably companies which are operational and have some traction. Revenue is maybe one of the metrics, but some traction and targeting. I think largely sector agnostic, but again, going into bonus points, if any, I would say if they are in healthcare, if they are in clean tech, or yeah, I think clean tech or healthcare is what I would say. The additional thing I would say is, like you mentioned, 2 to 3 founders. I'll also have a preference for more than one founder, I would say. So two is, I think, a good sweet spot. Three is fine if there is prior working equation. But yeah, that is something which I would prefer as well.
Amazing.
Profitability is very hard, I think, very initially to like see also and to
Yeah,
uh, like comment on it. Yeah.
yeah, amazing. I'll share this template with folks post the call, and happy like you guys can build your own thesis. But I we have I think a bunch of questions, so we
Yeah.
can Manav's question first.
Sure. So his question is, how do you evaluate the founding team at an early stage, right? I think the same question remains for pre-seed, seed. I think pre-seed, it's more like you haven't seen any execution sometimes. So then it's purely on their past experience, whether they have a sector fit or not, whether they worked in early stage startups or not, do they know what hustle will be required to build out an enterprise. And you are just looking at how passionate are they about the space, how committed they are to build this for the next 5 to 10 years, and whether between the founders there's been past working equation or not, have they been friends for let's say 30 years, etc. At a seed stage, I think it is a bit more of, have they made the right moves to establish themselves in the market? Have they gotten their learnings in? Have they really hustled hard in the space? And I think one of the questions I was discussing with Karan before we started the session was, there will be probably something around how do you evaluate? And I think at an early stage, 50% of the weightage we give is to the founder, right? We really feel that the founder is the one who's going to build this organization going forward. The model will pivot, um, the revenues will change, the team will evolve, but the founder is the anchor which will remain for the longest time. So I think evaluating that is very important. Again, it's subjective. People have different ways of doing it. Some people will do it on a behavioral basis. So I know of VCs who think of a founder as, okay, do they have certain characteristics they showcase, and that is their signal. I think we're not really indexed on characteristics, right? Because every founder is unique. So some will have very different behaviors from others. But broadly, I would say if they are showing commitment, they have some sectoral relevance, they understand their market, they're committed to it for the long term. I think that's a good starting point as a founder tick box. Yeah.
Great, great answer. Nishant, you want to go ahead?
Sure. Hi. Uh, so I had a question for Pranav. As part of a syndicate, right? How are decisions on entry and exit taken, right? Like in a fund, you have targets set for like some kind of returns over a period of time versus, let's say, for a syndicate, how would you typically go about it?
So, fair question. I think again, as Atrium, if I was to answer it, we think of it as a fund vehicle, right? So over there, we are thinking of, okay, have we gotten some gains on this? Is there at a 3x, 5x point? Again, a secondary exit, if you're taking it, will be at a discount. So if you're at a 5x, you're probably at a 3x in hand, right? So you need to be okay with that 3x at a portfolio level. So we think of it in that sense. Having said that, I think you also think that, okay, why am I exiting right now? Is there something off with the company? Are there chances there will be a regulatory change? Are there chances that they're struggling with a follow-on raise? Is it that a opportunistic buyer is at hand and I want the liquidity? All of those factors come in. But if I was to be honest, I think exits and secondaries in a 3 to 5 year horizon have to be opportunistic. So people will take it when it comes. I think be it an individual, be it a syndicate, be it a fund. Um, yeah, I think that's how I think of it. In terms of decision making around it, in case of a fund vehicle, which we think of as Atrium, we kind of put our reasons out, share it with our investors. If there is broadly agreement around it, we go ahead with it. But of course, we first check it with our investment committee, right? I think with this syndicate, it is more on the lines that you check with the members. If majority of them are inclined towards exit, the entire pool exits, depending on is it a single cap table entry or investors in the syndicate have come individually.
Yeah,
Depends on that.
I so
Right.
Nishant,
It is good. So just a follow up on that. So if there were individuals who wanted to, exit individually for
Hmm.
whatever reason, right? Would that be like a flexible option, or again, it would boil down to the overall consensus of the syndicate?
I think in a fund vehicle, it is more a, let's say, centralized decision. In a syndicate, I think there would be flexibility. I'll let Karan answer. Yeah.
yeah. So Nishant, in a syndicate also, right? Like eventually, like the cap table entry is of the syndicate, right? So essentially, the syndicate will take the final call on when to exit. But because it's a community, it's a group, so essentially, like for example, all our deals, we create a WhatsApp group with all the founders. The founders keep on sharing monthly updates and all, and then this is where we internally decide that okay, the company is now raising a follow-on round. We have an opportunity to exit in terms of a secondary. What is the group consensus? Do we want to kind of take a 3x to 5x? If we feel there is a group consensus, and if that also kind of matches with the kind of returns we are expecting, and we feel that a future follow-on might be difficult, and we will kind of decide to exit. Right. So like a final call for the exit will be taken by the entity which is on the cap table, which is the syndicate. But like it's the decision making process is more community led in a syndicate, whereas it's more centralized in a fund.
Got it. Yeah. Thank you.
I think you'd mentioned, like how do you enter into a company, right? Like how do you evaluate a company, right? Like from a syndicate point of view, right? So essentially, uh, so whereas a fund maybe is looking at a larger stake in a particular company, they're investing a larger amount, so they're looking at outcomes which are larger, right? Like $100 million, $200 million outcome. A syndicate, at least for us, yeah, we are okay with a 3x 5x return on an investment as well, right? Like essentially our philosophy is get in very early, get in at a great valuation, right? If you can get an opportunity to get a 3x 5x in the next 4 to 5 years, right, take that opportunity, because it's hard earned money, recycle it and invest it in other companies, right? From our perspective, we try to get in early and get an exit, as soon as a good exit is available on the table, rather than waiting for a very very large generational kind of exit.
Got it.
Yes.
Kaushal, you want to go ahead?
Yeah. Hi, Pranav. It's
Hi.
Kaushal here.
Hi.
So, I'm a founder, plus I want to start my angel journey. So, just past few months, I've started this journey here. I don't have an investment as of yet, but I want to understand your philosophy for deal sourcing.
Sure. So I think again, people have different approaches to that deal sourcing exercise, right? And I don't think there's a singular answer. It's a multi-pronged approach.
Exactly.
तो उसके अंदर there are inbound which will come as you get more known in the ecosystem. So there you have to do your own branding, you have to be more visible, you have to do events, and there will be inbound that way. You will probably write more often on LinkedIn, express your thesis, try to attract the right kind of founders. But everyone's going to try and do that. So how do you edge past that? That's where you try and build relationships in the ecosystem. You probably connect with other high quality investors. There could be funds, there could be angels, there could be syndicates, etc. Right? So you collaborate with them. And then you say that, okay, keep me posted if what you're seeing. I like to come in opportunistically, etc. The interesting thing is sometimes ecosystem enablers, right? So sometimes there will be incubators, accelerators. These days, lawyers and investment bankers are also very active and helpful, right? They have very interesting deal flow. So deal flow can come from all of these directions. And sometimes you get to know that, okay, this high quality startup executive is now starting up. Then you reach out aage se and try and say that, okay, if you are raising, let me know, I'll want to put. For example, there's been a company, I know that founder since 2010. I was in school that time. And this is the founder of Go Zero I'm talking about, Kiran Shah, right? I know him from his Apsara journey, and I told him that, okay, if you open in Delhi, let me know, I'll take the franchisee. Apsara is still not opened in Delhi. Then he started Go Zero. I remember seeing it on Facebook back in 2018. 2019 is when he started, I think, ideating about it, and 2020 or something in COVID, it came to life. So I messaged him on WhatsApp, ki, just if you're raising, let me know. So I think that's how you track some of those, right?
Did
I think.
you do Go Zero?
Sorry?
Did you invest in Go Zero?
No, I wasn't able to get a chance to invest in a personal capacity. I still hold that on him. I've messaged him about it when I was in Bombay also,
Yeah.
but maybe someday face to face. But the one final one which I'll say, I think, which is the most relevant is referrals, right? So warm referrals of people you know. For example, I've invested in a company which is by my ex-boss. I've invested in somebody who's an undergrad junior. So it's taking a punt on people you know, you've seen their behaviors, and that's how you're underwriting, right? 50% of the decision making, like we said, is on the founder. So it's a multi-pronged approach to get all of this deal flow. It strengthens over time. It won't happen immediately. 3-6 months you'll invest and it's strengthened. Then it'll start coming on its own, a little bit more automated. And as you start putting the check out, your word gets known that, okay, this person is actively putting this kind of a check. Once that is known in the market, word of mouth will spread. Yeah.
I think, Kaushal, just to add, like, one of the strongest ways for me, at least, to source deals is referrals from founders who I have invested in, right? So, like, even if you do like 1 to 2 deals in a year, if you can be super helpful to a founder, and have a particular domain strength that any founder can reach out to you on, then that kind of, like, becomes like an unbreakable kind of a thing that every founder would want your help on that, right? So like, for example, in my case, I've been trying to help founders go on social, reduce their CACs, scale their D2C, customer acquisition and all, and that I've, like a lot of my in portfolio companies founders now in share that their friends are starting up. Can you kind of look at that as well? So that becomes
Oh,
my deal flow.
okay. Cool. Thanks.
I think just to, uh, I'll pick up Vignesh's question since it's linked to the answer which you just said, Karan. Saying, given your operator background and enthusiasm, how involved are you? I think I I'll take a shot at it and I'll let you expand on it. So in my journey, if you see my operator experience, I think what type of operator experience also matters. I've never been a founder myself, but like I said, I've worked in 0 to 1, 1 to 10, and 10 to 100. And I think across all of them, you have very different learnings. So in 0 to 1, you know empathy for the founder, right? Life is hard, raising is hard, business is hard, managing personal finance is also hard. So you bring that empathy sometimes. At a 1 to 10 level, you're thinking, how do you playbook everything, right? I think, how do you get it to a point that scaling becomes easier? And 10 to 100 is where you realize, oh, how do you not mistake certain things? Like, how do you not hire the wrong people? How do you not put money on the wrong kind of initiatives, etc.? In terms of my involvement, I think as an Atrium operator, um, we do actively engage with them post investment. It's a lot more, however, driven on what they need. So it could be they need help with the next fundraise, they need with debt financing, they need help with hiring, they need help with getting an advisor on board, right? I think an advisor plays a very important role for an early stage startup. It's sometimes undervalued and it makes all the difference down the line. So again, how do you refer them to the right advisors to come on board? And sometimes they're just learning deeper insights about the industry. So can you connect them to someone who's a CXO in that area? Like, I am not a specialist on healthcare, but we'll connect them to people who are healthcare specialists, right? So that's how we try and be involved with them, but it's a much more on a need basis and as it comes from the founder. Like, we just try and be there. Yeah. Karan, do you want to add? Yeah.
No, I think, I mean, you covered it. Uh,
Cool.
Super relevant answer. I think, Pranav, I'll move. There's another question that I had in mind, which I maybe like wanted your thoughts on,
Sure.
especially because, like, from an Atrium perspective, you guys see a lot of deals, right? So, like, I would love to understand from you, like, if somebody is starting investing today, right? Like, what are some exciting opportunities? Like, what are some sectors that they can start looking at, right? And obviously, like, it's a like, again, depends upon your strengths, where do you want to invest in, like your individual thesis, but just like from an opportunity point of view, landscape point of view, like, there are the opportunities today for people to start investing in.
Right. So again, I think one is always optimistic when you're in the startup ecosystem. I generally like to be an optimistic person as well. As part of that, I think there are opportunities across sectors. Having said that, I think if there's certain sectors which I'm bullish on, and again, this could be a contrary view to others in the room or outside as well. Healthcare, I think, is interesting because as a population, I think we are aging. There are going to be more health crises going forward. Health costs are increasing. So, be it in the insurance space linked to healthcare, education space linked to healthcare, consumer space linked to healthcare, or insurance and financing related to healthcare, there are opportunities. So, that I think is a very interesting trend which is playing out, even in terms of devices, right? I think there are opportunities there. Second, I think clean tech is a much talked about aspect. EV is probably what is getting a lot more focus and visibility now. Solar is no more sexy. Back in 2015, 16, solar was considered it glamorous, but it's a good business, right? I think depending on what stage you're getting in, what appetite you have, etc. So I think clean tech and as an extension of that, maybe sustainability, right? Plays around that will be interesting. I also like boring businesses. So I think these are attractive on top, but the base remains the same. So I would say lending, B2B, SaaS, consumer. Yeah, I think that doesn't go away. Like, that is evergreen.
Got it. Amazing. I think. And what's your thoughts on like as a sector, generative AI? Like, is that something that you guys are also looking at?
We have seen couple of startups. So I think in generative AI, the two kind of plays are basically somebody who's doing it at an application layer, somebody is doing it at an LLM level. I think from Atrium, we see more ISB founders. A lot of them are more on the application side of it. There are interesting use cases emerging, both serving SMBs, serving enterprise. Um, and I think it's just a wait and watch sometimes, that how does it execute. um, there is a lot of activity in the space, so competition is also going to be high.
Hmm.
Do you have a right to win in that space becomes a question, and does the founder have a right to win in that space becomes a question, right? In enterprise, I think sales is very critical, and in SMB, the quality of your product tech and how you price it is going to be critical.
Hmm.
So we see the power of generative AI, but if I was to be honest, I think we'll balance it with the business use case of it as well, and
Hmm.
be a little wait and watch about it. Yeah.
Got it. Got it. I think from our side and my personal side, I am super excited about the consumer opportunity in India today, right? Because obviously, from a meta POV as well, I see a lot of brands, and like our internal estimate is that we are expecting about 1 million consumer brands to spend, which will be spending more than 50 lakh a year on meta platforms, right? Over the next couple of years, right? So if that's the number of brands that will be spending that much, so like you can just multiply it by 5 to 6x in terms of the revenue opportunity for consumer brands. I think we would be at 8 to 9% of that number today in terms of brands doing about 4 to 5 crore a year revenue right now. So I think this in the consumer space, we are a highly brand starved nation. While like we've had a demographic advantage in the 25-year-olds, a younger population now. 18 to 25 is one of the fastest growing populations, consumer cohorts for a lot of brands, and that, I mean, that set of audiences are looking to innovate with brands. They're looking to try different consumer brands, right? So I just feel in the consumer space, both brands, internet, as well as anything that enables brands, right? It could be ad tech, it could be customer support, CRM, inventory management, influencer marketing, right? All of that, we feel could be heading towards like multi like a 500 $600 billion opportunity in the next 3 4 years. And if we feel that we can come in early in a lot of those spaces, I think we can kind of have great outcomes. So I think that's one that
Agree.
we are super bullish on. Agnostic of sectors, right? So like it could be across health and wellness, it could be uh, in consumer intent. We can also look at fintech. It could also be just brands in fashion, apparel, food, uh, but essentially majorly targeting consumer or enabling consumer.
Yeah, I think the enabling consumer piece is very interesting. I think there is a question around social commerce market around it. I think we've seen the success of that in parts of Southeast Asia. It's not really taken off too much. You'll probably have a stronger point of view from Meta and some insights there as well. I think enablers otherwise are interesting in SaaS, and there are examples, Go Quick, and there are financiers who are focused on D2C, and that is also an interesting play, etc. Logistics, which is attached to D2C. So there are multiple opportunities that way. I think in consumer brands, as Atrium also, if I was to say, we're open, but I think in general for any fund vehicle or any other, I think collective also which is investing, the bar increases suddenly
Yeah,
because there are so many brands, right? So I
yeah,
think they'll just say that, okay, show us at least 25 lakh, 30 lakh, 50 lakh a month revenue.
yeah.
That's when they'll look into it a little bit more actively. I think there's one question by Aditya. The short answer, I think, on that, whether big VCs participating in an early round is good or not, I think my answer is yes. I think it's a positive signal value for multiple reasons. It will probably help them raise the next round. Else, if the big investor can do a follow-on investment as well, and it shows that, okay, the thesis is somewhere written by some other VC also around that startup. So I would look at that as a positive thing. The only negative, if one is to
Yeah,
think
it
of
should
it,
not be
is
the only decision making criteria.
Yeah. So that's what I was about to say. The only negative sometimes can become is that they also price out the round. So then, as an angel, you'll think twice whether you want to do a very expensive round, right? And agreed, I think there are so many funds that just because a micro VC is investing or a VC is investing shouldn't be the reason to co-invest in that round. There has to be an independent point of view on it. Yeah.
Great, great. Uh, I think I'm open to questions if anybody wants, from the audience wants to ask. Yeah, Abhijit, go ahead.
Hey, first of all, you guys are doing a commendable job. So
Thank
thanks for
Good.
hosting the session. And yeah, I think you covered a fair amount of how you think about investing and what are the areas or the sectors to look at and what you have been looking at. But I again want to get back to the investing basics, and especially like for someone like me who's trying to uh, toy around the idea of angel investing. So again, the question I posted more around the why, right? So when I look at angel investing vis-a-vis other modes of investing, like purely from a cold investment standpoint, the stock market is giving me around a 30 to 40% return. On an average, it is giving around 15 to 20% return to any given investor, any retail investor. So that amounts to roughly around 2.5x return in over a 2 to 3 year over a 3 year time span. So if you look at it from that perspective, purely from an ROI perspective, like if I have 10 lakh to 20 lakh to deploy in any given year, right? So how are there any data points or like what has your personal experiences been in terms of the returns it generates, the time span it takes for a portfolio of your angel investments, and how does it vary across the angel investor groups or communities, or is there a certain I would say bare minimal returns, like average returns that have been generated for the angel investment community? So just want to see the returns perspective, the why part of the investing.
Sure. Karan, you want to go first? Should I go?
Yeah, you can go ahead.
Cool. So I think it's a very valid question. Ultimately, it is an investment, and money is not supposed to be gambled. So I think I've heard this question from a bunch of investors over time. Um, think of it this way: it's portfolio diversification. It's a different asset class. Within that, if you start comparing it to other asset classes, you can't do an apple to apple comparison between a public market versus anything in the private market, be it private equity or early stage VC. Having said that, I think there is data which is published by SEBI about differently Cat 1, Cat 2, Cat 3 funds and what is the kind of return they are generating, right? I think Bloom has done a good job of sending out their Omega files, which is basically talking about their first fund. So they started a fund in 2014. They published the report in 2023. And in a matter of 9-10 years, they've been able to return the fund capital, but they have still gravy on top, which they will exit and give back to the investors. Um, I think if I was to put a number, I think somewhere around 30 to 35% IRR is what you should be aiming for. It's not a certainty, it's not a guarantee, and I say it with certain degree of responsibility over here. And as far as the markets are, I think you compare your mutual funds at a 15 to 20%. That's also cyclical. So in the last 3 to 5 years, we've probably seen a lot of bullish behavior in the markets. It may not be the same going forward. It will be good. Maybe a 12 to 15% is an easy expectation to have, but 15 to 20% might be a stretch. So it's more in that sense. Having said that, if you say passive fund investing, then I think this question holds. If you say angel investing, then I think if you're thinking purely economically, that's not the answer, right? I would encourage to say that one should take the time to angel invest, be it through an individual capacity or a syndicate, only if you're looking at other gains out of it, right? If you're trying to understand the sector, you're looking to back a founder, you're trying to understand new trends in the space, I think that's when it becomes more interesting. Otherwise, it will become a little bit more disheartening because, like we said, your failures will come before your successes. So
And it's
my
a
father,
non-liquid, it's a non-liquid asset type, right? At least for the first 5-7 years. So I
correct.
mean, if you're looking at investing passively, might as well invest in asset types which are more liquid, and which will give you like stable returns.
Correct. So now people have started doing venture debt funds depending on check sizes, etc. Like my father is a CA lawyer, he's a CFO of a company. So when I started angel investing, he said he wanted to put his money. I said, no, don't do it, because I knew that he will not have the one, given his age and his horizon, he probably doesn't have the risk appetite for it. Two, he probably doesn't understand the startup asset class. He probably is not going to be actively involved. So I said, wait, let me do it. You see it, and then you get involved. I've been doing it, but I've still not gotten him to put money because I don't think it's his decision to get into it that way. Yeah.
Pranav, if I may just add on to Abhijit's question, right? Like, as an angel investor or as a fund as well, like, what are 2, 3 metrics that you should, kind of track from a returns perspective?
Good question. I think as a fund, what we are tracking is what is your multiple on invested capital. So if in say
MOIC.
3 to MOIC, basically in 3 to 5 years, if you're getting to like a 2 to 3x, you're doing something right. But a lot of it is going to be variable and it's going to change over time, right? Things will fail, people will have follow-on rounds, paper valuation versus real-time exit. So these are notional indicators is how I would think of it.
And
Basis
does
the
MOIC
multiple.
take into account like this is the cash that is being returned to the investors, or this is just like the on paper returns that they have?
So this is basically saying that, okay, I invested at this valuation in the company.
Okay.
How much has it multiplied and gotten to,
Got it.
right?
Got
Which
it.
is why sometimes other people look at a metric of IRR, saying is it gross or net IRR, right? So gross IRR is on my investment, what am I getting back is full amount, and
Yeah.
net IRR is basically saying what's the kind of return which has been generated
Yeah.
net of principal. So those are typically the metrics you would look at. And to answer his question around horizon, I think for a fund it's easily a 7 to 10 year exercise. It could be smaller for a angel fund, maybe a 5 to 8 year,
Yeah.
but nothing faster than that. Yeah.
Yeah. Yeah. No, I think that's I mean, again, saying it with all responsibility, that's like one of our goals at Accelerate as well. That if we can kind of do like a 3 to 4x MOIC in in like a 4 to 5 year span for our investors, like this is what we strive towards, and that's why we also look at coming in very early, then backing companies which are profitable, which are revenue generating, and we know there's an opportunity for a secondary or an acquisition, so that like there is an that you can get an exit in 4 to 5 years.
Right.
Abhijit, does that answer your question?
Yeah, it does. Thanks a lot, folks.
Great.
Thank you.
Anybody else? Yeah.
So, Pranav,
Hmm.
your experience, your viewpoint or experience when startups actually pitch to you, like just a
Hmm.
viewpoint, and your sitting on a table, your experience.
Okay, so if I'm sitting on the other side of the table, a founder is pitching their startup.
Your worst and the best kind of experience.
Sure, let's start with the worst. Easier to recall. I think there are thankfully not too many worse pitches or bad pitches or not the best pitches, I would say, which I've come across. I think it's when founder is carrying a lot of baggage with them, right? Baggage of who they are, what they've achieved, what valuation they have, etc. I think that baggage is a problem point. You have to come very open into a conversation, and you have to be receptive to a conversation, right? It has to be a dialogue. So an investor should also be understanding that, okay, I am coming into a dialogue, not a monologue, so to say, right? I think that is one thing to keep in mind. And yeah, the good part of it is linked to this only, right? I think the good pitches which we've seen is where the founder is being honest. When you show your vulnerability, when you are being genuine about it, when you are being honest about the numbers, when you are giving straight answers, when you don't have to think because it is coming from a deep place of conviction, I think it is visible. It is visible in a Zoom conversation also, it will be visible in an in-person conversation also. And if you are able to show that hunger and that desire to build something meaningful, of course that desire to build something meaningful has to be matched with market reality.
Hmm.
And that's when it is like, oh, the founder is balanced and he's grounded, and he's talking about where he is today, and he's not shying away from it, and he's giving reasonable predictions of where he will go. So I think a solid operator that way is my preferred founder profile. Yeah.
I remember when I started investing, I mean, like, because I've been a two-time founder. And generally founders are very positive folks, right? Like, I would like personally, whenever I would meet a founder, I would just want to invest, right? Like, I mean, I would find positives only in every investment, and I had to train myself literally, across multiple pitches to then start evaluating and not look at it, from a very emotional sense. But I think like what Pranav said, like metrics, your key insights which you have on the market, that matched with your skill sets and how you're building. Like I think like these are few things that you kind of evaluate in founder pitches.
Yeah.
Great,
So
great.
I think we are almost up on time, but
Yeah.
I'm just looking at any questions which are still open. I think there's a question around Accelerate which is open, and
I
yeah,
think this is around. So Manav wants to know what kind of startups are we helping? Like how are we helping startups in Accelerate? So Manav, happy to kind of take it offline, but essentially, at Accelerate, we have built a community of 60 plus unicorn founders, and then we also have a lot of VC friends and investors like Pranav, and we work with almost all VCs and early investors in the country across all stages. And essentially, we run a 3-month cohort where essentially we help startups with GTM. So, how can we help you scale your revenue, your marketing, your partnerships, whatever help you may need in growing your business. We help you with your fundraise, in sharing your, in helping you first be pitch ready, preparing your pitch decks. We work very actively on that, making you pitch to a lot of our friends, like Pranav, like who would give you genuine feedback, and then taking it out there in the market, pitching to the big investors, right? Sometimes I think, like it's as like Pranav also mentioned that the community is small. You can reach out to almost everyone, but if there is a warm intro, then sometimes it's just like you kind of pitch to the right person. And if you've gone with prep, it just generally helps. So essentially, we run a 3-month program where we help our companies with GTM partnerships, revenue scaling, and then fundraising as well. And yeah, we look at companies which are bootstrapped, so that, and which are looking at raising their first round. So then if we like the founders, we can also personally invest in our capacity and we can help them scale.
no, sounds good. I think there's interesting work happening at Accelerate, and I think the podcast is also interesting. I was speaking to someone yesterday who heard the podcast you've done with Simran for Koparo, and they were like, no interesting insights came out of it. So yeah.
Yeah, yeah. No, yeah, I think again, like, so Simran, I've known, for a couple of years. And again, for me, the podcasting is a way to build deal flow. Like, like, I think, again, I'm going back to Sanjay Mehta when, he's been my mentor in terms of investing. And he told me this one thing when I started investing, when I did this first call with him. He said, अगर तुम्हें angel investing करना है तो पहले जाके LinkedIn पे announce तो करो. Like, why do you want to be a shadow angel investor? At least talk to 10 people, tell them that you're looking at investing, write it on your LinkedIn, make a post, write your thesis. आपको खुद ही 100 डील आने लग जाएंगे, and then you kind of go towards it. So been doing that, and the podcast is a way for us to do that. I think Gurdeep has a question around valuation. Valuation.
Sure.
Do you want to take that?
Sure. So I think there are different instruments through which one can raise capital, right? There's a CCPS and a CCD. Essentially, what the difference between the two is, in one you're pricing around, sometimes you're doing it on a convertible. So if it's like a pre-product, pre-revenue, I think it's okay doing it at a convertible, wherein you give a range that, okay, this is the floor of the valuation, there is a cap, and there is a discount whenever the next round is raised. And by that time, there will be a traction, and that's when a lead investor will come in and price the round for you. And the previous round investors get a discount to that valuation. Having said that, in case of a priced round, it works differently. Again, it varies a lot sector to sector, right? In consumer, maybe you'll say a 5x is more justified once you have some traction. In case of something like deep tech or space tech, you will not have revenue traction. So you are doing it more on a dilution basis, right? That if I'm raising X amount of capital, do I want to dilute more than 15-20%? And that is how the math works backward. Honestly, I've seen valuation reports by CAs and they will validate, and I say this again with degree of
Really
responsibility
valid. Yeah.
on record, that it can be adjusted basis what assumptions you take. So at a pre-seed seed stage, I think it is a lot a question of how much capital you're raising, how much you're diluting, and it's a negotiation between the investor and the founder, and rest is back math towards it. Unless it is maybe a category like consumer where there is a hard metric to look at, which is meaningful at an early stage. Yeah.
Yeah, I think perfect answer. I mean, that's the same process I follow.
Yeah, no, so I think we do try and tell founders not to be very aggressive with their valuation because it will become a struggle going forward, right? So it has to be a fair number, and rule of thumb says 15 to 20% every every round dilution is okay. Um, Sometimes founders are optimizing for 10 to 15%. It's just a case to case basis, I think. Yeah. Cool.
Great. Thank you so much, Pranav. I actually wanted to, just present the Accelerate deck to the community for a couple of minutes. So if you want, you can drop off. I mean, you're happy, you can attend that as well. But really appreciate your time. Thank you so much. Pranav is a part of our WhatsApp community as well. So if any of you would like to join that, please ping me separately. I'll add you to the community. We do weekly sessions. We also keep organizing pitches for startups where we are also investing and our friends are investing. So you can join one of those pitches as well. So do let me know if you'd like to join that community. And thank you as again, Pranav. Thank you for your time. Happy, always fun collaborating with you, and look forward to doing that in the future as well.
No, 100%. Look forward to doing more deals together, more events, and more initiatives together. More power to you. And yeah, I'll probably hang in. Go ahead. Yes.
Thank you, Pranav. Yeah, I'll just share my screen for a couple of minutes. Is my screen visible?
Yes.
Great. Yeah, so I mean, I'll just take a couple of minutes of your time to share about Accelerate, right? So at Accelerate, we're building this founder-led accelerator for early-stage startups and this investing platform, for super angels. We are backed by 60 plus unicorn founders and India's best investors, right? So as an early-stage accelerator, we run a 100-day accelerator program where we help startups grow with their GTM partnerships, fundraising, and then secondly, we have the super angel community where essentially we help investors invest in some of these good startups, help them build their deal flow, help them connect to some of the best people in the industry, do a lot of events, and present a lot of exciting investment opportunities. This is the Accelerate team. So Apoor, he heads startup and VC at Google in India, has been a best-selling author, angel investor in 200 plus companies, one of India's first angel investors. So there's Apoor, there's Tarun. Tarun is the founder of Talentgen and Capinity Fund. At Talentgen, he has placed more than 7,000 plus executives in leadership positions. Capinity is a growth stage fund, where they do 3 million plus in any company. He's also an angel investor in 50 plus companies. I, of course, I lead marketing for Meta in India. I've been a 2x founder. Some of our portfolio companies include, Wage Stage, RateGain, Blue Smart, Zip Electric, Mokubara, Shiros, Lucidius, Dukan, Inc 42, Assembly, People, many more. And, so we invest across sectors. Like we had 11 companies on Shark Tank this year. These are some of our visiting partners. The full list is available on our website. So again, backed by people across the industry. Neeraj has just launched his own AI consulting company in Dubai. He was one of the earliest investors in companies like Make My Trip. He's invested in 5 companies. Arjun Consumer. Brijesh obviously runs India Mart. Ankit Insurance Deco. Malika Consumer. Again, Akshay from Shiprocket. Chakri again in the consumer space. Tushar, who is in the electric and mobility
Sorry,
space.
Karan, sorry to pause you. I think others in the chat also saying they're not able to see the slide move. So the
Oh,
first slide was visible, the second and third didn't come up. Yeah.
thank you so much for letting me know. As soon as I started presenting this, let me check.
Beachmate was visible. If you go back to the deck, I think it will be okay.
अच्छा मैं दोबारा कर Let me know if you guys can see it now.
I'm not sharing the screen.
I think I took too many red-eye flights over the last 2 weeks. I'm like just a little sleepy. Sorry. Can you guys see it now?
Yes. Yes.
Perfect. Yeah, so I mean, I think you guys saw the first slide. These are our founding partners. That's Apurv. He had startup and VC at Google in India. Best-selling author, angel investor in 200 plus companies. Tarun, he runs Talentgen and Capinity. There's of course me. These are our notable investments. Innovate Stage, 8K, and Blue Smart. So again, across sectors, we had 11 companies on Shark Tank this year. These are our visiting partners. The full list is available on our website. So again, we're backed by people across sectors. So we have Arjun in consumer, Neeraj in generative AI. He's just launched his generative AI fund. He's been the first investor in 5 unicorns in India, like the companies like Make My Trip. Brijesh, he runs India Mart. Ankit, again, fintech, insurance. Malika in consumer. Akshay from Shiprocket. Tushar from Blue Smart. Chakri, again, in the consumer space. So our mentor pool is across some of India's best companies across categories. This is our accelerate cohort, which we've just finished recently, the 100-day program. And we had 8 companies as part of the cohort. We have companies like Leah, Tractor Factory, FitFeast, G, Nitara. So Tractor Factory is one of India's largest used tractor and accessories platform, doing about 12 crores a year. Leah got featured on Shark Tank, and they got a 4 Shark deal this year, doing about 8 crores. They raised a 30 crore valuation. FitFees is actually an investment which we are making on our side right now. We just closed a 35 lakh investment. DVC, the Matrix Microfund also invested. J is building the raiment for women in India. Nitara is building one of India's most loved aromatherapy brand. Travel Buddy is a very exciting consumer internet travel startup. We have a company called Cybees, which is building a full stack influencer marketing platform. So again, companies across consumer, internet, auto, and enablers. And this is a little bit about the Super Angels platform, right? So I think our goal is to democratize angel investing and and give you guys an opportunity to learn from the best, right? So we have these weekly mentor master classes. We've done 5 till now. Every week we have a session. We also do weekly pitches where you guys get access to a lot of pitches where a lot of founders pitch, and you can then take a decision whether you'd like to invest or not. And then we have an exclusive community, with some of India's top investors where you can learn from each other, and we do a lot of offline events as well. These are some of our industry partnerships. Like I run a podcast as well to accelerate. You guys can follow that on YouTube, Instagram, LinkedIn, or Spotify or Apple Music. And yeah, let's stay in touch. I'll if anybody would like to join the community, do let me know. Happy to include you guys. If you are keen on starting angel investing, I'll keep on sharing deals which I am investing in. Happy to have you guys invest as well. And yeah, happy to be of support in any way. Please ping me on WhatsApp personally. You can email me as well. This is something I'm very passionate about. It's not a money making initiative, it's a passion project right now. So happy to support in any way. Great. So if there's no other questions, thank you so much, everyone, for joining in. Great session. And thank you for your time, and looking forward to collaborate.
Thanks a lot. Thank you.
Thank you, Karan.
Thank you.
Karan,
Thank
let's
you.
catch up
Bye.
soon.
Sorry?
Let's catch up soon.
Yeah, let's do that for sure.